we are very conscious about the pandemic. My name is Stephen Buru. I'm a retired banker. It is only recently that the challenge came regarding the coping with diabetes and high blood pressure. When the pandemic started, I could not go to the chemist to get the medicine. What I did is I contacted UAP. The person who received my phone was Rahab, and she understood my predicament.
Fire exit. For medical cover, especially me and my wife, because the other insurances refuse to take 700 above. But with the UAP, we found a shoulder to lean on. Congratulations to UAP and Old Mutual for having partnered with the business community.
If you really love your family and your spouse, it's good to make some investment to really help you. My name is Diana Nzisa Motogwa. Life insurance has been very facilitating in the sense that when my father died, his life insurance is what tidied up my mother to take us to school. My husband, who died in 2003, also had a life insurance. That helped me put my children through college. So my journey with Old Mutual UAP, for my first life assurance policy, it was 15 years, and we worked together because even the payment, everything was done in 1 week. I was sorted out, and I also took a medical cover now. I'm a happy customer. So as Old Mutual UAP celebrate 175 years, you're tried and proved, so please live up to that image. It's a good one.
I learned that through adversity, people carry you through. My name is Juliana Moirore. I started out with Old Mutual through Sam Wainaina, trying to look at different investment packages, and it's in one of those conversations that he mentioned the critical illness cover. At first I was like, why take a critical illness cover when you have got a medical cover? 2 years down the line, I was diagnosed with breast cancer. It was a numbing experience, scary, and being a single mother, I started thinking about my son. How will I get treated? 2 months since we put in the claim, it came through. It was a journey that was really difficult, the chemo, the surgery, and it's been 5 years, so far so good, so I really thank God. My journey with them made me believe that they have a human face into it. Congratulations to the 175 years, and that you treat others with the same kindness.
Welcome, and thank you for attending our virtual investor briefing, where we shall present the UAP Holdings Plc 2021 end-of-year results. My name is Nanette Mingi, the Group Company Secretary and Legal Counsel, and I will be your MC for today. I will request that we start with the meeting with a word of prayer, and we can please bow our heads. Thank you, Lord, for giving us the day today as we commence our deliberations for the presentation of the financial results for the group. We pray that you be with us and watch over our deliberations, and at the end of the day, we give you all glory and honor. Thank you, and we pray all this trusting and believing in your holy name. Amen. I would like to take this opportunity to introduce to you those with me on this live stream. In the room, we have Mr. Arthur Oginga, the Group Chief Executive Officer, and Mr. Martin Karenju, the Group Head of Strategy and Innovation. On the call, we do have Mr. Arnold Dipena, the Group Chief Financial Officer, and my fellow Group Executive Committee members. Before we proceed, please note that we have a link, that a link to ask questions was shared together with the invite, and you may send through your questions for our attention as we proceed. I now invite the Group Chief Executive Officer, Mr. Arthur Oginga, to walk us through the group financial performance. Thank you.
Thank you, Nanette. Good morning, ladies and gentlemen, and welcome to the UAP All Mutual Investor presentation for the full year 2021 results of the group. 2021 was characterized by economic recovery across most of the markets we operate in on the back of the relaxation of containment measures put in place by the respective governments in East Africa to limit the spread of COVID-19. The relaxation of restrictions has been informed by improved management of pandemic waves supported by vaccination drives across all markets, and less potent new strains that do not overwhelm the healthcare infrastructure. New strains of the COVID-19 virus and the developing Russia-Ukraine conflict remain significant risks in the near to medium term for our respective economies. The recovery was reflected in the capital markets and business environment, measures as shown in the graphs on the left. The NSE 20, NSE 25, and NASI indices all registered growth in 2021. The index levels are still below pre-pandemic levels, and how that pans out in future will be dependent on listed corporate results and the sustainability of these results. We have so far seen substantial recovery within the banking space on the back of reduced provisions. The Kenya Stanbic PMI index remained at above 50 over most of 2021, signifying improved business confidence as business activity has resumed following relaxation of restrictions and reduced COVID-19 cases. Whereas overall there has been recovery, we did experience some headwinds as shown in the graphs on the right. The Kenya shilling depreciated against the USD, driven by increased USD demand following the reopening of most economies, increased global oil prices, and dwindling foreign forex reserves as key sectors such as tourism are yet to fully recover. Bond yields were on the increase across all tenors, largely driven by domestic government borrowing to support budget requirements. Moving on to the next slide, pressure on property rentals has sustained, with average rentals in different nodes in Nairobi trending downwards. Demand for office space did face a setback in 2021, driven by the impacts of the pandemic, and we have seen this reflected in some of our property valuations. We, however, maintained strong occupancy across the portfolio, save for South Sudan. For the insurance businesses, our short-term insurance businesses in Kenya and Uganda registered above market growth, with leading market positions attained as per the latest regulatory reports. The long-term insurance businesses registered double-digit growth, but came in lower than industry. As we have previously mentioned, our strategy is founded on 3 pillars. 1, building a strong foundation for growth. 2, customers being at the center of what we do. And 3, building for the future by investing in digital platforms. Those are enabled by our strong Pan-African brand, supported by talented and engaged staff. In 2021, on the foundations front, our focus has been on strengthening our balance sheet and improving our core operations. We have received all the regulatory approvals for the merger of the life businesses, with OMLAC now operating as a closed fund as a subsidiary of UAP Life Kenya. This will enable us to unlock synergies from the combined businesses and provide us with a strong platform for growing this business line in our core Kenya market. We also rolled out a new shared services operating model to improve service delivery and strengthened our control environment, which is foundationally critical for our growth ambitions. Customers remain at the center of our business. Our integrated financial services strategy is founded on providing seamless financial services to our customers. In 2021, we appointed a substantive customer experience head as part of implementing this strategy. Going forward, we will be relaunching our unified customer service centers that will address customer queries across all our portfolios of businesses. In terms of offering relevant solutions that matter to our customers, we have offered bundled products, a good example being an embedded optional critical illness benefit within our medical cover to provide our customers with a solution to the rising incidences of diseases such as cancer. As part of our digitization strategy, we have achieved the following notable milestones in 2021. One, we deployed digital last expense solution in the Kenya market. Secondly, we relaunched our Go Plus Health Rewards solution. And three, we revamped our web platforms to support sales and service. We will continue building on this foundation as digital is a core pillar in our integrated financial services strategy. Underpinning all the above are the resources and capabilities we have in the group, coupled with a strong, well-recognized brand. In 2021, we strengthened our technology capabilities within our medical businesses by implementing a solution that integrates our businesses with our medical providers. This solution will improve the service experience of our customers, enabling improved provision of care. We have commenced our rebrand journey with the Rwanda market now operating under the Old Mutual brand. The next phase of the rebranding exercise will focus on the Kenya and Uganda markets over the course of this year. The rebrand is aligned to our brand journey and speaks to the skills, capabilities, solutions, and promises we offer as a Pan-African financial solutions provider. The financial measures will be discussed in detail by the Group CFO. However, we have seen improvements across most measures in 2021, with growth and cost management trending well, and claims being the only area largely due to the impacts of the COVID pandemic. At a business line level, we registered improved but somewhat mixed results. Our insurance businesses registered strong top-line growth across both the short-term and long-term lines. The strong growth resulted in improved or strengthened market positions for most of our short-term businesses, but in the long-term space, we did not grow as fast as the market. Costs were well contained, however, claims were a challenge. The COVID-19 impacts were felt in our morbidity and mortality experiences in the medical and life businesses respectively. Asset management maintained the performance trajectory observed in recent years with strong fee income growth, improved market position, and improved profitability. Property registered a declined performance, largely attributable to the non-recurrence of valuation gains enjoyed in prior year for our South Sudan property. I will now hand over to Arnold to take us through the financial performance.
Good morning. Let's check if I'm audible. I just want to check, can someone confirm that I'm auditable?
Yes, Arnold, we can hear you. Go ahead.
Thank you. Thank you. Thank you. Is the video on? Thanks. Thank you. Good morning. Thanks. I'd like to take you through the financial performance for our 2021 financial year. If we look at financial performance, we've recorded a loss before tax of 175 million shillings in 2021, compared to a loss of just over 1 billion in 2020. This performance improvement was mainly driven by some strong top-line growth, improved investment income performance, and reductions in our cost base. These improvements, however, adversely impacted by increased claims cost, mainly attributable to the impact of the COVID pandemic. The results presented include the consolidation of OMLAC, which was acquired by UAP Life Assurance Limited with the effective date of control of 25 January last year. Total income, as you can note from the income statement, is up 26% on 2020. This was driven from a good top-line growth across all the businesses, improved investment income following the recovery of the Nairobi Stock Exchange, growth in our investable assets, and these were supported by the top line, increased top line, as well as some disciplined collection of premiums during the year. Other income growth from profit was on the sale of a portion of UAP Life to Old Mutual Holdings Kenya as part of the acquisition of OMLAC by the UAP Life business in Kenya. This was, however, offset by property fair value adjustments of some of our properties, especially in Kenya and South Sudan, due to prevailing market conditions. Excluding the impact of OMLAC consolidation, total income was up 14%. Our net claims payable increased by 38% year on year, and that was driven partly by increased medical claims costs due to COVID cases, a worsened motor book experience in our Kenya market, and a hardening of reinsurance terms in 2021 that has led to reduced reinsurance recoveries. Excluding the impact of OMLAC consolidation, net claims payable was up 22%. We are continuing to engage with our customers who have been impacted by the pandemic and supporting them in receiving appropriate care. Operating expenses were down 9%. Cost has been well maintained, driven by operational efficiency on the back of recent technology investments we've been made in the recent years, as well as focus on strengthening the control environment. Excluding the impact of OMLAC consolidation, operating expenses were down 18%. Interest costs on borrowings were up 9% on 2020, driven by the actions we took towards the end of 2020 to refinance some of our local debt into local currency, and that's mitigating the forex mismatch risk we were carrying. Local financing was however at a higher interest rate, but the refinancing of our dollar-denominated debt in the second half of 2020 and in early 2021, and such, we have eliminated the forex risk, given that the Kenya shilling has been depreciating against the dollar in the recent months. Income tax expenses was significantly up year on year. The increase in income tax expense is largely driven by the non-deductible expenses across the business and the derecognition of deferred tax assets relating to tax-assessed losses from a couple of our loss-making businesses. This treatment is, however, in line with the accounting standards. No dividend was recommended for 2021. On the next slide, I will cover a bit more around the detailed drivers of the income statement. In general, insurance business across East Africa had a strong top-line performance, with both medical and P&C growing at 24%. Our short-term businesses across East Africa had a strong top-line performance as a result of market engagements and service improvements initiatives over the last 3 years. These initiatives are paying off and will continue to drive this. Life business top line was 82% above prior year and 24% if we exclude the impact of the OMLAC consolidation. The growth was largely driven by Kenya and Uganda corporate business sales, following the onboarding of a few major schemes throughout the year. On the property front, the table at the left bottom shows rental income on shareholders' investment properties over the last 2 years. As can be seen, rental income increases came through in Kenya and Uganda, while in South Sudan declined due to our reduced occupancy as some of our exit of some of our tenants. The operating environment in South Sudan has remained a challenge, with a number of organizations scaling down and shutting down operations, and that's impacting on the rental space demand. Our asset management business in Uganda achieved a 95% growth in fee income, and this was supported by unit trust growth as well as brokerage income attributed to the MTN IPO. Our leading position in the unit trust space in this market continues to deliver superior performance for our group. If we look at investment income, as indicated earlier, net investment income was up 20% and 2% excluding the impact of the OMLA consolidation. This was driven by a 37% improvement in investment income due to increased investable assets from strong top-line growth, as well as our disciplined collection of premium receivables during the 2021 financial year. These investments gains were offset by negative fair value adjustments on properties in Kenya and South Sudan. The Kenya fair value adjustments was driven by one property which came up for a lease renewal, and the rental rates reverted to market levels. For South Sudan, the adjustments were driven by occupancy reductions, was driven by occupancy reductions as some of the tenants opted not to renew their leases, largely due to scaling efforts that have reduced their space demands. If we look at claims, the overall loss ratio for PGI were higher than prior year across the region. In Kenya, the claims experience was driven by higher claims incidents on the motor and increased average non-motor. That's excluding health, and that's largely on the back of higher retention. This is being remedied in the current year via premium adjustments. In Uganda, claims experience was driven by hardened reinsurance terms experienced in 2021. We are repricing our contracts at renewal in line with available reinsurance terms, while in Rwanda, we experienced increased motor claims largely due to the impact of the relaxation of the 2020 pandemic lockdown rules. On the medical side, the overall loss ratios were also higher than the same period in the prior year. Apart from South Sudan, that experienced increased cost of claims due to medical inflation in the market. All other businesses had adverse claims experience owing to COVID pandemic and some adverse service provider behavior in Rwanda. We have claim containment initiatives in place and expect to improve, which we expect to improve our performance in 2022. On operating expenses were down on 2020, largely to the non-recurrence of our balance sheet cleanup, which we've accounted for in the previous year. As part of our foundation's journey, the focus on strengthening the control environment across all businesses, which has historically led to recurring operating losses. The benefits of this focus were evident in the significant reduction in operating losses in 2021. On segment performance, our core businesses achieved performance improvement in 2021 despite the challenges we've experienced with claims. The combined impact of strong revenue growth, cost containment, and improved investment performance was sufficient to offset the adverse claims experience observed. The property business, however, experienced a decline in 2021. The core property performance, excluding the fair value movements, have been improving year on year over the last 3 years. However, the fair value adjustments front, there was a decline relative to previous year, largely by the performance of the South Sudan property business, which experienced reduced occupancy and which had a negative valuation impact. Overall, the group achieved an improved profit before tax in 2021, largely driven by improvements in our core businesses. Thank you.
As explained by Arnold, we have experienced very good premium growth across most of our key markets. This reflects the confidence that our intermediaries and customers have in our business. Investment income has improved, although impacted by further fair value adjustments, mainly in South Sudan. Our total income growth has consequently been very positive. Our core business is insurance. During times like we have experienced in the last 2 years, we expect elevated claims. We have kept our promises to our customers and settled those claims. This will build trust and can only be good for the business in the long term. We remain focused on our integrated financial services strategy with an immediate focus on our customer experience, digital transformation, and rebranding our business. Underpinning this is the development of our people and culture, which is core to the delivery of the strategy. While the operating environment does present some risks both regionally and globally, our business has shown that it is resilient over the pandemic period, and as such, we remain optimistic that we will be in a position to navigate the headwinds that this may present. Let me hand over back to Nanette to take us through the Q&A session.
Thank you, Arthur. We will now take the questions that have come through the Q&A portal. We have received a number of questions from the participants, and I do have some of my colleagues on the line who will assist in responding to the questions that have come through. So the first two relate to the rebrand and the integration of the UAP Old Mutual brand, and I will ask Arthur to assist us with the responses in this regard. So the first question goes, what does the rebrand mean to customers, and what lines of the business are merging, and what has informed this? Thank you, Arthur.
Thank you, Nanette. I will take the rebrand question and then ask Martin to talk about our merger, or the merging of the life businesses. What does the rebrand mean for our customers? We are currently operating 3 different brands across East Africa. Some of our businesses are UAP. In Kenya, we operate as UAP Old Mutual, and we also have Old Mutual as another different third brand. Through this brand exercise, or rebranding exercise, we want to eliminate the confusion around who we are, and we have done some research that indicates the Old Mutual brand is a trusted brand that has been in this market for a significant period of time. The rebrand should also rekindle interest and hopefully generate more business for the company. Internally, our staff are energized around the rebrand. Our team in Rwanda has just completed the rebrand, and the energy and the reinvigoration that has generated in that business should spur further growth and build on the improvements we are making around customer experience. Martin, if you could take the next question.
Apologies for that. In terms of the merger, we are looking at merging our 2 life businesses within the Kenyan market. We have been operating 2 licenses since the acquisition of the business in 2015. The merger is informed by a need to present ourselves to the market as one business, and also to unlock efficiencies that we've identified in having one business within the Kenyan market. In addition, we believe the combined business will give us more scale and better market position to enable us to compete better within the market. And lastly, we are looking at standardizing the customer experience for our life customers in line with our unified customer experience strategy that was alluded to as part of the overall presentation. Thank you.
We have a few more questions that have come in, and these relate more generally to the general insurance business. And I will be calling upon my colleague, David Kuria, who's on the line, to give us the responses on this. So the first question, David, is on the new minimum premium rates. If you could give us the response that or approach UAPL Mutual has taken in respect of that new development. And the second element relates to claims and whether there has been an increase in claims from prior year. And if you could give us an analysis of that. Over to you, David.
Thank you, Nanette. Sorry for that. Yeah, for premium rates, we know there is a case in court as it's a sub judice matter. Suffice it to say that at UAP or Mutual, we do experience rating where we match the risk, the premium to the risk. That has been our practice over the years. Yeah, so we do what is called experience rating. On the second question, yeah, there was a general increase in claims across the industry last year. For UAP, we registered an increase of 20% in terms of claims ratio from 65 to 69%. And there were three key drivers. One was the increase in our business volume, where we grew revenue, gross written premium by 24%. So certainly the claims also increased because of increased volume. The second driver was there were three COVID waves last year. So that had a direct linkage, that was a direct driver of the increased medical claims in that respect. The third driver was increased motor claims, mainly driven by increase in the cost of spare parts due to exchange rates movements, where the shilling lost to the dollar and therefore the cost of import shot up. And as you know, we mainly import our spare parts, and that had that impact on our motor claims. So those are the three drivers of the increase in claims experience. Thank you. Thank
you, David, for those responses. I do recognize there could have been a slight echo, and we will undertake to provide these responses on our website following this briefing. The next set of questions that have come through relate to an emerging situation, and I will ask Arthur to provide us with a view on the same. So the question that has come up asks us, what measures have you taken towards the developing situation in South Sudan?
Thank you for that question. And I assume this is referring to the peace agreement and the recent disturbing events in South Sudan. Our immediate objective is obviously to ensure that our staff and our staff remain safe, and we have taken measures in that regard. We have then taken measures to ensure the continuity of the business, particularly ensuring that medical provision, which is a significant part of the business there, continues in earnest. We are monitoring the situation and will obviously, as it pans out, adjust the measures we keep taking ensure particularly that our staff remain safe and that service provision is maintained through this crisis. Thank you.
Thank you, Arthur. We do have one last question touching on the innovations around claims processes and what improvements that we expect to roll out in this regard. I will request David, if he's on the line, to respond. Otherwise, we would post the response in line with the collated responses we will post on the website subsequent to this briefing. Thank you.
Yeah, I can confirm that we have invested quite heavily in the improvement of the claim value chain. For example, we have established a fully equipped assessment center here at Upper Hill, where motor vehicles that have been involved in accident are taken for proper assessment before the repair can be authorized. We are also investing in technology, where we are considering to go into telematics, so that we can be able to rate driver behavior and charge premium based on that, where you actually reward good driving practice and also charge a premium for based on the driver characteristics. And that is the next frontier we are looking into investing in, and we believe that with technology we'll be able to improve our customer experience. Thank you.
Thank you, David, for those responses. Having looked at the portal, the questions that have been provided to the group have been substantively responded to, and we have then now come to the close of the Q&A session. So with that, I take this opportunity to thank you all for taking your time to attend the investor briefing, and there being no any other business, the meeting comes to an end. We wish you a lovely and blessed day ahead. Thank you.